Hey, it's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I want to talk a little bit about my CL port strategy because I had a couple questions this week on it, and I thought today was a decent opportunity, so I wanted to show you what I saw and how I exited the trade as well. All right, the vertical lines you see right here is the opening range of the open outcry, or what used to be the open outcry of the crude oil market between, and my time is on Central Time, so when you're looking at everything, you're looking at CST. This is 8 a.m., so this is the start of it, and then 5 minutes later, the first bar that prints, it says 8:05, I put another vertical line in. So the range to start with would have been here through roughly here. So let me get the screen draw tool out. So right here through here. And if we look at it, this was the highest volume bar right there. So I was looking to short it coming into the morning. Now obviously I see this over here, and we'll talk about that in just a minute. So at the time of trade, this was highest volume bar. I'm looking to go short. We see another high volume bar right here. So at 8:06 and at 8:21, these two confirm that the short is at least in the way that I look at it, for the CL port trade, that I'm looking to go on the short side. So and in actuality, this high right here is 15 and this is 19. It can work as a double top, or you can work it as not a double top. Today I worked it as not a double top, but I was also looking below here to see when I found well, let me put it this way. Usually if it goes 2 or 3 ticks higher, I consider it a double top. Anything over 3 ticks, I start my count over again. So if I look at what I was trying to accomplish here, the vertical line that I put in the range is here, but I also want to recognize how far or where there were some support prior to this. So originally I was looking at this area, but then I noticed that this formed, went up here, and then went down. So this counts right there, and what you could do is get involved in it here, or you could have waited a little bit longer and then got into it. Anyway, so this is how I set it up. This bar closing up over here, up over my highway, it's the line itself is up and over. So and I look back and I know that we've already formulated something here, and we have been down at the support level on several different occasions. I believe at 8:28 well, I was filled. Yeah, 8:28 a.m. Central Standard Time. Right here I was filled. So, and my original stop loss was I went with 9 ticks today, and I put it right up here at I think my high was at 18, and I put it at 17. I figured if it was going to go to 17, it was going to go to 18 and 19, 20. So I really didn't want to take anything more than a 9-tick stop loss when I first started the trade. And I was looking for a target of, let me bring up my spreadsheet here. I was looking for a target of 47.80 on the opening trade, 1p, and this is crude oil inventory. So, you know, I'm always expecting the market to do just pretty much anything it wants. But this was the 1p target right in that area. So if I look at what I was trying to accomplish on the CL port strategy, this right here, this range right in this area was what I was looking at. All right. So I thought we would have a chance to run down to at least right here, and you look back and it looked like it could easily run back down here if it wanted to run down. I didn't think of that was too much upside pressure at this point. As we continued to, as we went up, we didn't find a lot of buyers to come into the market. I saw sellers here and sellers here. So I felt pretty good about the short trade entry. And I moved, when it went down to here, let me get rid of the screen drawer. and then bring it back up again. So now actually let me stop this, move it over a little bit so you can see how I handle the trade itself. So when it went down here, I brought my stop down to actually after it went back up here and then went back down for the second time, I brought the stop to 2 ticks on top of this right here. So this was 12, I believe, 48.12, and I had a stop at 48.14. When it went back down for the third time right here, and notice that we were making higher lows, right? So higher low here, higher low here, higher low here. And that could easily have been stopped out up here, but I decided at this point, when we got down here for the third time, I went to break even +1. So I got stopped out at 48.07 right in this area right here. Now the market does go all the way up like I thought. If it was going to have any oomph at all, you know, it was forming a bottom. At least it looked like it was forming a bottom. It didn't break through. The 200 bar line was holding, and it just didn't look like a good setup anymore. So what I ended up doing is coming down here. So I start here originally, I go to here, and then I go to here on my stop loss management. I end up only taking 1 tick out of the trade, but hey, it's a positive trade. After commission costs, it's a whopping $5. I can go get my my McDill, was that 2 for $5 at McDonald's, right? So I can go to Mickey D's and get my 2 for $5, right? How's that go? I'm not going to give them any more credit than what they have. So you can see that this went down and then it went down here. I'm not trading anything beyond this on the CL port strategy. I'm only looking on that first entry, right? So that one entry, this was the best chance right here. Excuse me, when I went in, this was the best chance for the market to break down. And when it went up here, this right here is the best chance for it to break down. So this right here to break down here, or to break down after it comes back up. The most uncomfortable part of the trade is this part right there. Is sitting and wondering, is it going to go up here and run you out, or is it going to go down to target? So, you know, so you can, if you're comfortable with, you know, a 9 or 10, or if you're comfortable up here with your stop loss, it really comes down to what you want to risk in your account, you know. I know that at Top Step Trader on the $30,000 account, I have a max daily loss of $500. In actuality, I can't get anywhere near that. I can only get close to around 400. And 400 plus commission costs means that I have to be, I can only take less than 40 ticks of stops, hits in my account to stay underneath the $400. In fact, I got to be underneath that for 40 ticks. So that's 400 plus commission costs just on one contract. If I would take a $400 loss plus the contract, you know, it'd be 405. 405. If you're watching the stuff in the past, you know that I like to stay between somewhere between 3 to 4, no more than 5 trades in any given day. And any time that I notice that I go up to 4 trades or higher, it's not normally a very good day for me. That's just the way it is. And while I'm thinking about this, you know, you get into these streaks where you win some, you lose some, and you know, in CL port strategy, you know, it's like, well, you know, it seems to sometimes it seems to get on a streak where it loses more than it wins. Another time it seems to get on a streak that it wins more than loses. But overall, you know, you got to just keep at it. And I'm not saying it's the perfect strategy to take on. I mean, you have to realize when you have a tiebreaker scenario, and this in actuality ends up being this high red bar volume ends up making it a tiebreaker. So, and that was another good reason to get down here and say, you know what, I want to get to break even, because now the this against this is showing me that the market's indecisive at this point. So try to understand what the market's trying to tell you right now. The market doesn't know what it wants to do. Therefore, the best course of action is to tighten your stop, get out, and wait for another trading opportunity to come on. So you don't have to take your full loss every time, is what I'm getting at. You can see what the market does you can see where the natural support and resistance is in the market, and you can trade that. When it's an orderly market. Obviously, when it's a volatile market, then you have to let it go, because it's going to take you out a second or two. You're going to win or you're going to lose, and I guess that's the way it is. So when it comes to that kind of stuff, I know there was one more point I wanted to make when I was taking my shower and getting ready today. I think I've covered pretty much everything I wanted to cover. Why? I guess the question that comes up sometimes is, how do you get started how do you get to take, I guess, how do I put this? How do you get yourself to take your first trade? That very first trade every day, I don't care who you are, it's that very first trade. There's still ants in the pants. There's anxiety buildup. There's a lot of stuff that comes in if you let your emotions take over. You've got to just get out there and put it out there and get your feet wet. I find that after I put that first trade on, win or lose, I calm down, and I just try to trade. The very first trade I put on, I always try to take the best possible setup that I see on the charts at that point in time. Where my fault sometimes used to come in, and even to this day, I got to watch myself, is that I like to get it back. So if I like to get it back, if I recognize the mistakes that are with me, I know that I can't immediately come right back into a trade. I've got to let my emotions get in control again and really see what the market's trying to show me, and then try to get into the market. So it's a lot harder to do than say. I will tell you that. I still have those days where I have I hit my loss limit that I'm looking at, like I talked about, that $400. I hit that before I can make a decent trading opportunity. But you got to have your ouch point as well. So right now, on this, I know that I don't want to risk. And like now, I'm at day 9 of the funded trader. I want to take away something out of all this. Obviously, I like to be able to pull out on the CL pit strategy today that's coming out here in the next half hour. I like to pull out 83, 84 ticks on my trade. And get a 3P target that never looks back, and I would love to put $840 into my bank right now. That would bring my balance up over the 1,000 mark. I mean, will it happen? Well, I don't know. That's the uncertainty principle. All I know is I'm trading my edge the best that I can, and I am always trying to take more out of the market than I'm willing to lose. I believe in my heart that, in fact, if you see any trader out there in any room, or anybody saying that, I'm going for 2 ticks and putting a 4-tick stop, they're not going to make you money. They've reversed it. It needs to be 4 ticks and a 2-tick stop, but that's way too close in the crude oil market, right? At minimum, it needs to be a 10-tick target with 5-tick stop. I mean, at minimum in the crude oil market, and that's when it's not even moving. So, that's just minimum. But my minimum usually is around 10 ticks. I don't want to, 10 ticks, and I'm hunting for at least 20 ticks in the market. So every time I'm putting on a trade, I'm always looking, do I have enough room for profit, and can I get at least 2 times out of the money that I'm willing to lose? Always. All right? Dave Knight here at Knight Capital. It used to be Knight. Well, that's my LLC. Knight Capital Management. Blast from the past there. Floridian Slip. Yeah, David at 123daytrade.com. Thanks for watching. Thanks for being here. I'll see you on the next video I put together. Bye for now.